Hello and welcome back. The uh, title of this section is Understanding the Data Repository. And so what we're going to do is go through the data repository, explain the different worksheets and what's on them. And then there will be another lecture on how to update the data repository. Okay, so if you open a data repository, once you enable the macros, what it'll do is it'll take you to the Welcome tab. And so that's what we have open right now. And on the Welcome tab, it will have the date that the data repository was last modified. And it also will have the version number. So sometimes that becomes important if we get versions that are out of synchronization. Also on the Welcome tab, we see that there are a number of hyperlinks that can take us to different worksheets within this workbook, or we can just select the tabs at the bottom. So I'm going to go to the first tab. It's called Calendar. And what the Calendar tab does is it looks at all day-related items that we need for forecasting. So sometimes we look at quantities based on the number of shipping days in the month. Sometimes we look at them in terms of the number of calendar days in the month. Or if we want all the months to be the same, we look at flat days. So I'm currently looking in the calendar worksheet at columns C, E, and G. Now over to the right of that, we have a place where the by intensity index days are saved. They're abbreviated BII, and we say them B days. And so in column K, we have the current retail B days. And in column M, we have the previous ones. So as soon as we update these, we move what's in column K over to column M, and then we update column K. And so up in rows 4 through 9, we have the information about where those B days came from and when they were updated. Now there are two sets of B days. On the left we have the retail B days, and on the right we have the ex-factory B days. What the retail B days do is they correct for demand data, demand values, so that we can get a better trend. What the ex-factory B days do is look at actual shipping days for product coming out of the factory. So is a Tuesday bigger than a Monday? How many Tuesdays do we have in the month, for example? Like that. Okay, if we go to the next tab to the right, it's called Demand Factor Units. And these are quantities that will come from some kind of an audited source. They typically will not come from the company itself, such as ex-factory data. So these would be audited by some outside group. Could be a data provider like IMS or SHA. And in the first section, we have retail plus mail order units, columns C through X. And then in the next section, we have non-retail units. And so what we actually have here is three types of product, three types of units that are being sold. So in the left section, we have retail plus mail order. So these are units that are sold for revenue dollars. And then we have non-retail units. So these are units that are sold to institutions and hospitals and prisons, things like that. Now, if you go to the next tab to the right, it's called free of charge units. And here is the third type of unit that we have, which is products that are free of charge. So these are products that are given freely through the patient assistance program or some other type of program like that. Okay, if we keep going to the right, we have the budget tab, and you could think of this as a budget, or you could think of this as the current forecast that we want to see if we're hitting. So, for example, if we're above this budget or current forecast, we're beating the forecast. If we're below it, we're where our sales are behind. The next tab over is called Ex-Factory Sales, and in here we have different sections. The first section is revenue packages. So these are units actually sold for money that are shipped out of the factory. And then the next section, starting in column Z, is the gross revenue. So these are the dollars that we get for the revenue packages that were shipped over in the left. And now if we keep moving, scrolling to the right, we look at the net revenue section starting in column BS. And these are the net revenues as opposed to the gross revenues. And so both gross and net are going to go into the forecast model. And then if we keep scrolling to the right, we have some what we call sanity check sections. One is the gross price per box or per unit. And this gives you an idea of if there's a problem in the data because the price per unit will not look right. And then we have the very last section to the right is called the sanity check sales reserves. This is just another term for gross to net. And here we're calculating the gross to net from the gross and net revenues. And again, this quantity should look reasonable based on what we know about the product. Okay, the next tab, worksheet to the right, is called demand. And the demand tab is whatever quantity we're calling demand. Typically this is sales very close to the customer. So this could be prescriptions, or it could be boxes sold from wholesalers. This particular data repository I have up has prescriptions in it. So we're looking at 4 columns of prescription data. And we also have a section in there for competitors. And then to the right of that, we have submarket data, where if we had products that were from different submarkets, we could keep those separated here. And then we have some checking area, that kind of tan area. And then in column BJ, we have the market total, which is just the sum of all the products. And then the very last tab in this worksheet is called Objective Insights, and you can use this tab if you need to email us or call us directly. And that is it for the data repository. For explaining the different parts of it, we will have another lecture on how to update the data repository. All right, thank you.